Good afternoon, everybody. We're going to make a video on supply and demand zones, how to identify them, how to use them, etc. So I'm going to use Robinhood chart, for example, in today's video. I'm going to go very basic on this for you guys. I'm not going to go too extreme, but it's very simple. Supply zones are basically bear walls. The bear zone, this is where the bears will, this is basically the distribution zone. This is where the profit taking is. This is where the short piling up is. This is where all the puts will be, all the call profits will be. Same with vice versa for the demand zone. The demand zone is basically where discounts will be. This is where short covering will be. This is where long buyers will be. This is basically the bull zone right here, and this is the bear zone. And they really do help people identify where to sell and where to buy based on a zone. So instead of using support and resistance, which only relies off of one level, and that is very hard for most people, because a lot of people are trying to rely on one single level instead of a zone, because not every single level in the market does work out. So you want to make sure that you are using supply zones and demand zones to give yourself a nice range, so you're not missing out on a move such as the distribution zone and the accumulation zone. So I'm going to show you guys a Robinhood chart right here, for example. It also really depends on what time frame you guys are on. So if you guys are on the daily time frame or the weekly time frame, and if you guys are using the big chart, for example, this whole multi-month chart, looks like you're going to be looking out a 3 to 6, 9-month period. If you guys are using micro levels, for example, you're using daily chart, but you're also using the smaller demand and supply zones, then you're most likely going to be day trading or swing trading. So keep that in mind. If you guys are using the 1 hour, or you're using the 5 minutes or 1 minute or 15 minutes, you are going to be day trading, and make sure you stick on those time frames. Do not change it. Don't be using the daily chart and try to do that for day trading. That's not going to work unless you guys are using the micro levels on the daily chart. But for example, let's say I'm going to be investing. I want to buy Robinhood on a discount. Okay, so my time period of holding Robinhood stock can be a month or 2 or 3. It could be up to 6 months. Depends on where the supply zone is and how deep that pullback is. So I'm gonna give myself a zone. A zone will be something like this, because a zone is more successful than a price level like this, for example. You will see more. You will see better results playing the demand and supply zones like a range rather than a horizontal price level, because there is a better chance that the stock will find a reversal in the area, and you have a much better result and profitability if you give yourself a range of a dip or a profit taking level rather than relying off of one level, because not every single time that one level is going to hit every single time. So let's go ahead and start off with supply zones for you guys. Supply zone is pretty simple. Supply zone again will be the bear zone, just like this, the distribution zone. The profit taking, buying puts right here, taking a short play right here, bunch of different things. Same with cover calls as well. So supply zone right here will be a good one right here on Robinhood. This is where the bears are taking over. This is the bear piling up. They're all teaming up to take over the Robinhood chart, or the double top right here. A good way to identify it also is that this high right here made a lower high. So this also signaled a very strong supply zone, and that is before Robinhood continued to sell off from there. So that is a good distribution zone right there for a supply zone. Now, let's say I want to buy Robinhood on discount. I'm going to change that supply zone to the green zone, and I'm going to look for a area where Robinhood has bounced off multiple times. So it looks like we have something right here. So I'm going to give myself a range between these levels right here And it looks like Robinhood has touched that zone multiple times, and it has bounced off it every single time. So this is a demand zone. This is where the accumulation zone is. This is where the long call buyers are. This is where people are starting to buy the dip right there on the Robinhood chart. So every time we touch that bottom of the zone around 97, Robinhood bounces back up. We get in that zone again. We bounce back up, come back down, make a higher low or lower high, and come back down, and same thing. We touch that demand zone, we bounce back up again. This is where you want to be buying long precision. You want to be buying long calls. You don't want to be buying long calls when the stock is at all-time highs or when it is in a supply zone. You gotta also keep in mind that it is important to also look out for micro supply zones and demand zones. So I'll show you guys, for example, you might not see much between this range of the supply zone and demand zone because you're looking at a bigger picture. But if you guys want to pick a little entry and try to nail a good entry in the middle of a zone, for example, you can also look between the ranges and look for a certain area where we're seeing a trampoline bounce off of. So we're looking at support right here. We have some interesting moves right here in this area. So I'm going to go right here and put that supply or demand zone right now on Robinhood. It has been used as a demand zone and supply zone. I'll explain why real quick. So every time the stock goes above a certain zone or a certain level, that zone becomes a demand zone. Every time we get back under it, the same level becomes a supply zone. It turns into a bear, a bull wall, back and forth, as long as we get above it as demand zone or we get below it as supply zone. So currently, it looks like Robinhood, every time we touch that 120 zone, we bounce off it. We come up to the supply zone again. We come back down the same demand zone at 120 again from the previous level right there. We bounce back up, supply zone again. This is where you take profits. You wait for a pullback, and then you hit the demand zone again. This is where the call entry should be. This is where you want to go long again. We bounce back up. It's in the middle of the range. We come back down again. This is where we try again, but this time we fail. So the next day we come back down. This turns into supply zone until this gets back over. But the next day we come lower. We try again. We try breaking back above it. And this time we turn this into supply zone. And we reject lower. And guess what? We come back down to the same demand zone on the third time at 97 area. We come back up. We break back above the demand zone, and this is when things get volatile because we're visiting the supply and demand zones too often. So every time we're making volatile moves, that is when the volatility is picking up, and retail are very, very uncertain on what's going on right here. But as of today, based on the swing idea, Robinhood has bounced and held that demand zone right here at 120 area. You can see how we tried getting under it earlier in the midday, and we came back above it, above 120, and it looks like we're using that zone as a demand zone. And there is potential that this can bounce off a demand zone, and head back in the mid 130s. That is basically the supply and demand zones on the Robinhood chart. Same thing with over here. We have a lot of different examples on the Robinhood chart. There's a good example right here on a supply zone. Let's say, for example, this is currently what's going on with Robinhood right now. We have a topping point on Robinhood right here. We have a topping point on Robinhood right here. This looks like it's going to be demand zone because we're rejected from that area multiple times and we're failing to get above it. So what happens after that is Robinhood, for the second time we get into that supply zone, the bears are taking over. This is where profit is being taken. This is where the long puts are being taken. This is where the cover calls are starting to be taken. And guess what? A couple weeks later, that is when we sell off all the way from the supply zone, and this is where the bears take control. And let's see if Robinhood has taken that opportunity, or if the bulls on Robinhood has taken the opportunity to use that as demand zone on this bounce right here, on this sell-off. So let's go ahead and see. It looks like it did, because you can see on the big bounce we have a little high right here and a little high again right here. So we have something right here for Robinhood. We're going to change that red zone to green zone because it is going to be demand zone. So based off of this bounce on Robinhood, we bounced off a previous high, and we bounced off of the same previous high that we had, and that is going to be our demand zone. After that, guess what happens? This Robinhood chart bounced off it. It went from 13 all the way to 23. And after that, what happens to that old supply zone that we had over here on Robinhood? It looks like it worked out a couple of times, but it ended up being choppy and killing some premiums, some short-term bulls and bears. Guess what happens after that? Ever since we broke that supply zone after this rally, this supply zone turns into demand zone, which ends up being a bounce zone for Robinhood right here. And after that, guess what happens after the demand zone works out? Robinhood comes up all the way over here, a new all-time high. We continue higher and higher and higher, all the way up here, and that is basically the supply and demand zone. It's very, very easy to use it. Make sure you are using it on the right time frame. You don't want to be doing this if you're day trading. If you are day trading, you want to be looking for micro levels, like this, for example. Supply zone right here can work for a few candle time frame. Same with demand zone right here. This is supply zone, demand zone. And after we break through the supply zone again, that means that we are confirming the breakout higher on the move above the supply zone right here. And if we retest it, that will be used as demand zone. And we'll go higher and retest that same big supply zone that we had. Come back down and chop up. So this is basically the supply and demand zone for you guys. Make sure you color code your supply zone as red and your demand zone as green, so you know which is which. It's very, very easy to identify it. Keep in mind, supply zone will always be the distribution zone. The demand zone will always be the accumulation zone. That's basically it for the video for you guys. If you guys have any questions on anything like that, it is a little confusing at first, but the more that you do it, the more that you use it on your tools and your charts and your everyday trading and swing trading, the more success you guys will find it in your trading. Any questions, let me know. I'll be happy to help you guys. Take care.